Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news markets are awaiting signals from the minutes of the late January Fed meeting. In the US, mortgage applications fell rather sharply last week, down more than 10% from the prior week, to be 13% lower than a year ago. A key reason for the sharpish pullback was an unexpected surge in mortgage interest rates, which jumped 19 basis points to 7.06% plus points for the benchmark 30-year fixed loan. That is their highest rate of 2024. These higher rates reflect the shift in market pricing as chances of near-term Fed rate cuts recede. American retail sales rose 3% last week from a year ago at bricks and mortar stores in the Redbook survey. This is barely enough to keep up with inflation. A second straight week like this after 9 weeks of significant volume growth. A hesitation, though, was always on the cards. Sharply lower oil prices and exports at a 14-month high have combined to deliver Japan a sharply lower January trade deficit. Those exports were on the basis of good demand from both the US and China. In Australia, wages rose 0.9% in the December quarter and 4.2% for the full year, marginally more than their CPI rise of 4.1%. That's its highest growth rate since 2008. And the US Treasury 10-year yield starts today at 4.32% and up 6 basis points from this time yesterday. And Wall Street in its Wednesday trade is down 0.4% on the S&P 500. Overnight, European markets were very mixed again, with Frankfurt up 0.3% and London down 0.7%. Yesterday, Tokyo ended its Wednesday session down 0.3%. But Hong Kong rose 1.6% in their Wednesday trade, while Shanghai was up at 1.4%. The China Securities Regulatory Commission has imposed restrictions that prevent sales in the first and last 30 minutes of trading for prices that are lower, part of an increasingly drastic set of measures to prevent the Chinese stock market slump from extending into a fourth year. The price of gold will start today down $3 at $2,027 an ounce. Oil prices are $1 firmer at just on $78 a barrel in the US, while the international Brent price is up to $82.50 a barrel. And the Kiwi dollar starts today at just on 61.7 US cents and unchanged from yesterday. Against the Aussie, we're marginally firm at 94.3 Australian cents. Against the euro, we're still at 57.1 euro cents. That all means our trade-weighted index starts today at just under 71.2 and little changed. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.